How do you calculate zakat on capital gains from investments? Imagine you've been investing your money and suddenly realize there are specific rules about sharing a part of your gains. Understanding how to calculate zakat on capital gains from investments can seem tricky at first, but once you know the steps, it becomes straightforward. First, you need to know that zakat is due on wealth that has reached the unknown, which is the minimum threshold, and has been held for 1 lunar year. Capital gains from investments are considered part of your zakatable wealth once they are realized. That means when you sell an asset and make a profit, that profit is now accessible and should be included in your zakat calculation. Start by identifying what type of investment you have. If you own shares in a company involved in trade or business, zakat is due on the market value of your shares or on the part of the company's assets that relate to your shareholding. If your investment is in a company that owns machinery or buildings, zakat is only due on the dividends or profits you receive, not on the value of the shares themselves. Next, determine the zakatable amount. For short-term trading investments, treat the entire market value of your holdings as zakatable wealth. For long-term investments, some scholars suggest calculating zakat only on the liquid assets of the company proportional to your shareholding. A common approach is to consider about 25 to 30% of the market value as zakatable, reflecting the liquid assets that can be easily accessed. Now, include your capital gains. Once gains are realized and held for 1 lunar year, they become part of your zakatable wealth. If you reinvest these gains, you add the new total to your investment portfolio and calculate zakat on that amount at the end of the lunar year. If you receive dividends or profits, these are zakatable separately at a rate of 2.5% when received. The zakat rate is always 2.5% of your zakatable wealth. For example, if your total investment including capital gains is 100,000 currency units, your zakat would be 2,500 units. When calculating annually, subtract any new investments made during the year and add any withdrawals or dividends received to find your net zakatable amount. If your investment has a loss, then no zakat is due for that year on that particular investment. There are some special cases to keep in mind. For retirement or pension accounts, zakat is usually calculated on the accessible portion or contributions, not the full market value. This can be done by multiplying the market value by a factor like 0.075, which is 7.5 per thousand. For bonds and fixed income products, zakat is due on the principal amount, but interest earned should be given to charity and not considered zakatable wealth. In summary, to calculate zakat on capital gains from investments, you add up the total value of your investments including realized gains, determine the zakatable portion based on the type of investment, and then pay 2.5% of that amount if it has been held for 1 lunar year. Dividends and profits are also zakatable separately at the same rate when received. This method aligns with Islamic finance principles by distinguishing between assets and income and ensuring zakat is paid only on wealth that is accessible and productive.